Hello students, in the current video I will cover cash flow statements. CCMA Osmania University June July 2023 question paper. 3 questions of cash flow statement. One is short, 2 long questions will be covered in this video. So first question is the short question which was asked for 4 marks at 8th question. In this question we are asked to calculate cash flow from operating activities. The information furnished in the question is total sales, total purchases, total expenses, and under that prepaid expenses, opening, closing both we have provided. Then opening debtors, closing debtors, opening creditors, closing creditors. Besides this, the last information is outstanding expenses, closing balance we have provided. With the help of this information, we are asked to calculate cash flow from operating activities. When you come to the solution, we have to prepare a format cash flow statement. Cash flow from operating activities, one format we have to prepare. In this, what we have to do now, we have to calculate cash received from customers. If you see the working note 1, we have written total sales 1,60,000, which inclusive of debtors balance even opening as well as closing. So what we have to do here, opening debtors will be added to sales and closing debtors will be deducted. Why should we add opening debtors and why should we deduct closing debtors? Because debtors created without receiving the money. In the sense, when we sell goods on credit basis, debtors will be created. Opening debtors in the sense, last year whatever goods we sold on credit basis, the money might have received in the current year. That is the standard assumption. Whatever goods we have sold now on credit basis at the end of the financial year, that will be received in the future. Therefore, we are concerned about only cash received. Therefore, opening will be added, closing will be deducted. With the help of this, we can calculate cash received from customer, that is 1,50,000. This amount will be recorded as cash received from customer in working note 1, referring as 1,50,000. I have kept it. Now what we have to do, we have to calculate the total expenditure incurred in the firm. How we can calculate that? First, second working note, if you see, we have calculated cash payment made to creditors. For calculation of this, the information we have received in the question and we have utilized this. Total purchases are 1,20,000. The total purchases made during the financial is 1,20,000. Add opening creditors less closing creditors. What is the standard assumption? That the creditors, when creditors will be created, when we purchase material on credit basis without making the payment, we receive the material, then creditors will be created. Therefore, what we have to do here, opening creditors will be added. In the sense, last year whatever credit purchases we made, the standard assumption is that to this year, in this current year, we made the payment. Closing creditors will be deducted. What is the assumption? Whatever credit purchases we made at the end of the financial year, we will make the payment in future. Now we did not make the payment, therefore we are deducting this item. So with the help of this, we can calculate cash payment to creditors. And the third working note is also very significant here. Total expenses given in the question 12,000, and further information is opening and closing prepaid expenses and outstanding expenses. This information even we have provided. This information is related to expenses. So what we are doing, first we are adding closing prepaid expenses. What do you mean by this closing prepaid expenses? At the end of the financial year, whatever prepaid expenses we made, that should be added, because while calculating these expenses, we did not consider this expenditure, prepaid expenditure, because this belongs to future year. So when we follow accrual financial system, we don't consider. Therefore, what we are doing now we are adding, since we made the payment, though it belongs to the future year. Therefore, closing prepaid expenses will be added. In the same way, opening will be deducted, right? Opening prepaid expenses will be considered in the financial year, but last year itself we made the payment, therefore it should be deducted. In case of outstanding expenses, opposite we have to do. Closing outstanding expenses will be deducted. Outstanding expenses in the sense, Still we did not make the payment, but we have recorded as an expense in the financial year according to accrual system. Therefore, this expenditure should be deducted, closing outstanding expenses. In the same way, if opening outstanding expenses is given, it should be added. Since in this question it is not provided, we are not considering. So like this, we got total cash paid for expenses is 6,000. Once you get this value, the summation of these two working notes, that is second and third, will be written as cash paid to supplier and employees and all expenses. Once you deduct this 1,50,000, once you deduct 1,16,000 from 1,50,000, you will get resultant figure 34,000, that is called as cash generated from operations. Clear? In this way, we have to calculate this. Now, when you come to the long question 13a, this information is provided for calculation of cash flow statement, for preparation of cash flow statement. The following are the comparative balance sheet of XYZ Limited as on 31st December 2018 and 19. The information is 18 and 19 balance sheet information, assets and liabilities we have provided. Land, stock, goodwill, cash, temporary investments. Temporary investment is refers to cash and cash equivalents only, cash only. Debtors, share capital, P&L account, 9% debentures and creditors. With the help of this information and additional information further we have provided, dividend declared and paid during the year were rupees 17,500. Dividend declared and paid. Land was revalued during the year at rupees 1,50,000 and the profit on revaluation transferred to profit and loss account. This is very significant adjustment that we have provided. You are required to prepare cash flow statement at the end of 31st December 2019. So with the help of this, we have to prepare a cash flow statement. So let's see the answer, how to solve the problem. So I have taken the question again. Now, then we have to prepare the format according to accounting standard 3, that is cash flow statement. Entire format I have drawn here. Then in working note we have to do calculation of profit before tax and extraordinary item even. So these two tables we have to draw. In calculation of profit before tax and extraordinary item, you should write profit and loss account. Whenever P&L account comes, the balance comes, that we will be writing here. So once you draw the format, then you start the problem from asset side. Land is given 1 lakh and 1,50,000 and there is an adjustment on land. So we will prepare ledger account related to land. Since land is an asset, shows which balance? Debit balance. So to write in land account, we write to balance brought down 1 lakh by balance carried down 1,50,000, that is opening and closing balance. Now what adjustment says? During the year, land was revalued at rupees 1,50,000 and the profit on this revaluation transferred to P&L account. So what we have to do? Revaluation entry. What is the entry of revaluation? When asset is revalued, asset account data to profit and loss account. Since we have transferred this revaluation value to which account? P&L account. So the entry was land account data to profit and loss account, that is 1,50,000 it was revalued, in the sense opening value was 1 lakh and closing value is 1,50,000. So land was revalued during the year at 150, in the sense total revaluation is 150, the closing value 150 itself is that. So the difference of revaluation is 50,000, that is opening already we had 1. So how much we have revaluated by 50,000, that we have recorded. And this revaluation, once we record in P&L account, we will close the ledger account and we will write this revaluation on building in calculation of profit before tax and extraordinary item as a minus item. Though there is no cash inflow, but we have increased our profit by 50,000. So therefore minus 50,000 we have to write. Once you close this account, you will not get any balancing figure since the account will get tallied. Then what we have to do? Next item is stock. Stock I have already written here, that is in working capital. Stock is one of the current assets, so therefore it will come under working capital. So stock was how much? 2,46,000 to 2,13,500. Stock has been decreased. When stock decreases, we have to take this as a what source? Current asset decreases, working capital will decrease, therefore it should be taken as an add item. So bear in mind, precisely whenever current asset decreases, it is an add item. Current asset increases, it is a minus item. For liabilities, vice versa we have to do. That I will explain down the line. After stock, we have goodwill. Goodwill last year we had 50,000, now it is 25,000. It is quite clear that goodwill has been written off. In the sense, goodwill is an intangible asset. It was written off by how much? 25,000. This will be taken in adjustment for only, as it is a non-cash item. Cash at bank and temporary investment, both will be considered as cash. Therefore, it will be taken opening cash balance, that is 42,000 plus 3,000. Collectively, we will be writing 45,000 is our opening cash balance. What is our closing cash balance? Closing cash balance is how much? 35,000 plus 4,000, right? That we will record. But before that, we have to write debtors. So what is happening with regards to debtors? Debtors are increase in debtors. How much? 13,500. There is an increase in debtors. That will be written. Since current asset is increasing, that will be a minus item. To make you understand better, I have kept it in red color. It is not mandatory, but you should write in brackets, that is as a minus item. So debtors increases, the difference is written as a bracket item, because increase in debtor will leads to increase in working capital. Increase in working capital is application. This is the concept here. So once we are done with current assets and total asset part, we will move to the liability side. Share capital, last year our capital was 350, now it is 370. So increase in share capital is 20,000. So issue of shares is 20,000. That is a financing activity. Most important, issue of shares will be considered as a financing activity. That is 20,000. Next is what? Profit and loss account. So how much increase in profit? That is 2,400. That will be written as a P&L in calculation of profit before tax and extraordinary item, 2,400. Next, 9% debentures. Debentures was 60,000 and 30,000. So we considered as a redemption of debentures, in the sense we are giving back the debentures to the debenture holders, that is 30,000. So that will be taken as a redemption of debentures. Right. So after debentures, we have creditors 51,600 last year, now it is 59,200. What is the increase is taking place? Creditors, that is one of the current liabilities, therefore we will take in working capital change. So creditors are increasing. Increase in creditors will lead to decrease in working capital. Decrease in working capital is source, 7,600. Precisely, you bear in mind, whenever you are writing current assets and current liabilities, it will be written in working capital change. Current asset increases, put in bracket. Current asset decreases, what we have to do? As a source we have to take. Current liabilities, do it opposite. Current liability increases, source. Current liability decreases, application. This is the precise concept that you need to bear in mind while doing cash flow statement. I hope I made you understand. Clear? So once this is done, we will come to the adjustment. We are left with one adjustment: dividend declared and paid during the year. Dividend declared and paid during the year will be written both the sides. One is calculation of profit before tax and extraordinary item, that is 17,500 as an add item, non-cash item, and this will be written in financing activity as a dividend paid, application 17,500. With the help of this, we have done everything. Once we are done with everything, now we will come to the closing. First we will close profit before tax and extraordinary item. So when we make the summation of three values, that is 2,400, 50,000 and 17,000. So 50,000 is the negative value, we are getting the value 30,000. 100 is the negative value we are getting. Clear? So what we have to do with this value will be written as a profit before tax and extraordinary item. Okay, so once you write this value, then what you have to do, you make the summation of Roman 1, cash flow from operating activities. So we will get 5,100 negative, that is operating profit before working capital change. Then working capital consider, then you will get cash generated from operation 21,500. Since we don't have any tax information in this question, tax paid is 0. Therefore, first item, that is EBIT, cash flow from operating activities, 21,500 positive. In the sense, cash generated from operations is 21,500. Then we don't have any investing activity, that is 0. Then we calculate the financing activity. Three values we have: 20,000 minus 30 minus 17,500. Therefore we are getting the figure is 27,500 negative, right? So in this way we have calculated cash used in financing activities 27,500. So three values we got: investing is 0, operating and financing. So make the summation of outer column three values, that is minus 6,000 we are getting. Minus 6,000 plus opening cash value. Minus 6,000 is refers to as increase or decrease in cash and cash equivalents, that is minus 6,000. So to that we will add opening cash balance 45,000, then resultant figure is 39,000. This 39,000 is the closing cash balance. How we got? 35,000 plus 4,000 temporary investment. So I hope I made you understand the entire crux. I have covered most important adjustment, that is revaluation of asset adjustment. This is very significant as far as the Osmania University and any other university exams. This is the maximum what we call strength of the question which will be asked in any university examination. Clear? So this is the second question in the same category. So two questions will be given from cash flow statement. So the second question is, the financial position of RAM as on 1st January 2017 was as follows. This is the sole trader information we have given. How to prepare cash flow statement? Same procedure, right? But in this we have to prepare one capital account, right? So 17 opening, 17 closing. Assets we have given: cash, data, stock, land, building, machinery. Creditors, Mr. Ram's loans, loan from bank, capital. This information we have given. Other information is, during the year proprietor withdrew 26,000 for domestic purpose. The provision for depreciation on machinery: opening is 27 and closing is 36,000. Prepare cash flow statement. So let's start. So now I have taken the question again for the quick review sake. So say I wish you all the best. Thanks for watching the video. Do subscribe my channel Mentor the Trusted Guide. I am putting best efforts to give you good quality content, and your subscription and your likes, your comments will always motivate me to make good quality content. Thank you very much.